Good morning, traders from each and every part of the world that you're joining this series of the daily morning market call from. If you can hear me, kindly comment on this comment section. Good morning, our morning, so that I know we are on the same page. Okay, good morning, McLean. Good morning, Jeff. Good morning, Augustine. Good morning, Rich. Good morning, Godfrey. Good morning, everybody. Good morning. Good morning, Paul. Thank you. So, before we proceed, I would like to bring it to your attention that this is going to be a pre-recorded YouTube video. That is to mean that you could find it later for reference at your own convenient time in our social media platform, with emphasis on YouTube to help us increase our algorithms to reach more people so as to bridge the educational gap. So you can find this video on YouTube at HFM Kenya, YouTube channel, HFM Kenya. Kindly like, subscribe, and click on the notification button and share widely so that this knowledge gets to various people who dearly need it. Right? So before we proceed, we will begin with our standard procedure of sparking a conversation in the lines of fundamental analysis before we go to the charts to look at technical analysis and see the opportunities that lies ahead. So we have defined before that fundamental analysis is the economic and the geopolitical forces which moves the financial market. And today we are going to be taking a keen interest in the effectiveness of Donald Trump executive orders or presidential orders in the financial markets. How are the markets are responding? We shall see that stocks and indices are responding positively, and today we're going to go by the order of gainers and losers, which ones are buying and which ones are selling and why. All right, but before we proceed on to that, let's take a break to look at the key highlights for the day. For example, gold has reached the 2750 mark, that is yesterday, roughly around 19 hours ago. So we see a demand in gold. Curiosity would lead us to ask, why is gold improving on its demand? It's because of these uncertain times. We know that there is so much which lies ahead, especially with the entry of Donald Trump into office. And debates have been sparked as to the effectiveness of Trump's in the financial markets. Now, without sounding like much of a critic, we lived through the first term of Donald Trump. We know his leadership style, and we could reflect that into this second term. Not much is going to change. And as we know, the United States pushes the world agenda. So this is going to cause a lot of market movement. But now, the tension and uncertainties that we are experiencing in the financial market is majorly attributed to the uncertainties brought about by the tariffs that is yet to impose. Tariffs to mean more taxes for goods coming from outside the United States into the United States. This is what we would call trade warfare. It's a trade warfare, okay? Because he is imposing these tariffs on key allies of the United States before the taking over of his administration. Who are these? The Chinese, the Canadians, their southern neighbor Mexico, right? We see even threats of imposing tariff in the United in European Union. Now, when these shakeups and uncertainties are injected into the market, they would cause fear, and fear would lead investors to go for to buy gold as a safe haven. Now, when the demand is high, the price will increase, and that's why we see yesterday gold reaching the 2750 mark. Another adjustment we'd want to talk about and highlight for the day is the market adjustment to Trump's rhetoric. Okay, we see the emergence of recreation of industries in the tech. So we see over 500 billion being injected into artificial intelligence, and you know that is in the side of technology. So we see stocks behaving with specific interest to US 100, behaving in a certain way to this positive news, because it will mean more jobs are going to be created. It means no more inventions are going to be created, and we will possibly see, at least in the first quarter and second of this year, this particular asset being bullish. Jeff, we can hear you. Kindly mute. Thank you. So let's proceed. But before we go deep into the chart, also, it is important to note that the European, the ECB market briefing, the hedge funds rampant bet on US stocks. So we see a little bit of competition to replicate what is happening in the United States in other geographical, strategic, economic powerhouses. And all this is going to have an effect on various asset classes. That is on geopolitical events. Now, on economic data, we see the Bank of Canada Consumer Price Index, which is an inflation index, coming out lower than expected. So we see a cooling inflation in that part of the world. Remember, the Prime Minister of Canada just resigned a few weeks ago, attributing to internal party politics. But we see his exit is coming somewhat cooling effect on the inflation. We also see the New Zealand CPI year on year coming slightly above what was expected. So we see inflation cooling in one part of the world, and in the other part of the world, we see inflation hiking. As we move into tomorrow, we know that the Bank of Japan is yet to announce its interest rates, and this is going to shake up the Asian tiger section of the world. That is the Asian part of the world, the Chinese stocks, Chinese as a Japanese as a currency itself, Japanese related companies, both in the UK and the United States, amongst other variables. So at this stage, I will go straight to the charts, beginning with our currencies here. Today we begin with gold, usually. So we see gold rallying, being in a bullish trajectory. Just a minute. Macklin says we don't post. Macklin, possibly you don't look at it quite keenly. It is surely there. If you go right now on YouTube, HFM Kenya, you will see the videos. They are there. No problem. Just check. You'll see. I'll try to make them post earlier the day. So we see gold being in a rallying or a bullish trend, breaking the 27 mark at the 2750 mark. Now, we want to see gold come and take out its all-time high at 2850, right? And gold to proceed being bullish as far as these uncertainties are concerned. And we know that the first tariff is to be implemented on the 1st of February. So we have quite a number of days. This is for scalpers and day traders. and also swing traders to take advantage of this and get in for the particular um, trades in context. Now, for stocks, for S&P 500, we see that we are observing from the daily time frame a pure rally from the just concluded um, retracements, and now price is tracing to the upside. We see now the entry of the new heads of state in the United States is giving a somewhat positive environment for the S&P 500 to be in a bullish trajectory, a possibly scenario we are going to experience also in US 500. Where we are experiencing a bullish trajectory that has been there throughout the week. We want to see the all-time highs being taken out, and this is motivated by the fact that we know that fundamental analysis with economic geopolitical events actually moves the markets as we know. We see the economy of the United States being in an optimistic environment. Just in the previous concluded days, we saw high NFP numbers coming out to mean more people are getting employed. Days after that, we saw PPI, that is Producer Price Index, coming out soft to mean the inflation is cooling down. Then we later see CPI coming out strong, coming out soft also, to suggest a cooling inflation. So on top of that, now the Donald Trump policies, both local and international, seems to somewhat favor the stocks in that part of the world, and that's why we are observing they are rallying to the top as we have quarterly and annual releases into the coming future. US30 will also give us the same. We are recovering from the just concluded retracement, and we would want to see price printed to the upside to take out the highs. Of course, in the context of all this, we will have momentarily to observe retracement as price cools off to keep rallying to the upside. But overall, fundamentally, we know that we're in a bullish trajectories. For currencies, USD JPY in this context, as we anticipate tomorrow's Bank of Japan interest rate decision, we might experience a somewhat consolidating market in the context of USD JPY, finding certainty after the interest rate decision is reached by the Bank of Japan. But as we are having this conversation, we know that we're in a bullish trend in this particular pair. So for the buys, it's going to be much more safer. That's for day traders and scalpers. Unusually today we look at the price of oil, and we're going to be taking much more interest in oil moving forward. Remember, oil is classified under commodities, and that is energies, oil and gas. Now, US oil, we encourage not only to smell oil but actually to trade it. And what is happening? We see again the big name Donald Trump revoking policies of the United States in conserving environmental standards, withdrawing from the Paris Agreement, which we know largely was an environmental standards, and in shift exchanging it in among the over 100 executive orders that he gave into the coming days, the drilling of oil. So we will possibly see the demand going down because of so much surplus. Because in his policies, Donald Trump argues that the United States can produce enough oil to cater for much of the needed demand in the global scenario. So we possibly see the price continue to come down. But as we monitor other OPEC countries, those are oil producing and energy countries, adjusting to this new terrain that has been introduced by the incoming United States president on the individual stocks, with a keen focus on Apple and Tesla. We now anticipate Tesla to start to continue with the long bullish trend that it had. You'll observe this particular chart has got gaps. This is because it opens with so much pressure every week in either direction. But overall, the global markets are optimistic of positive yield on Tesla. So we'll possibly see it rallying to the top, recovering from this consolidation just concluded, and possibly taking out the all-time high around the $476 per share. Apple also, we're expecting to bounce off. Looking for a specific tool. Okay. We're expected to bounce off from this area that we can observe here. I wish to draw it. I'm going to do it better tomorrow, no problem. A bounce off and price to start to continue rallying to the top, giving impetus to the already formed bullish trend. And this is also due to the favorable conditions for US-based company, and Apple happens to be one of them. And if you could remember during Donald Trump's inauguration, we remember that the tech moguls, the technology captains of industry, were seen to take the front stage. This is to reciprocate by administrative support in growth and maintenance of their companies, and this is what is giving us optimism to proceed with getting interested in this particular stocks. So as we conclude, as a disclaimer, it's important I know that this is not by any chance financial advice. It's meant purely for educational purposes. Kindly do your due diligence, and most importantly, remember to observe risk management. As we anticipate more news coming in and more market shakeups coming in, both planned and sudden, it is important we observe risk management to ensure longevity in the financial space. Until tomorrow, see you the same place, the same time, to do things the same way that has proven consistently profitable. Until then, God bless and take care.